Hello students, welcome to IASBYHEART Prelims Heist. So in this session we are going to discuss about the third set of economic questions. Let me see the questions one by one, right? So question number 21. Question number 21. Which of the following statements are true regarding the financial market, right? So we know what is financial market. See, market is nothing but the meeting point of producer as well as consumer. Okay, so producer, whenever the producer and consumer meeting a particular place, which is called as market. So financial market is nothing but a borrower and the money lender meeting in a single place, which is called as the financial market, right? So according to the financial market, so the financial market may be divided into two types. So one is money market and second one is capital market, right? See what on the basis of what difference the money market and the capital market differentiated, sir. See, money market is nothing but the transaction, that is money transaction, the borrowing and lending activities, which is less than the 1 year of time, that is 365 days. So the maximum maturity for the transaction of money within the ambit of money market is less than 1 year. See, if you want to transaction with more than 1 year of time, then the market is called as capital market. See, simply money market is nothing but banking and sub-market, right? And capital market is nothing but share market. Okay, so this is the difference between the money market and the capital market. So on the basis of these statements, we may derive the conclusion. See, first statement, money market caters to short-term loan requirements. Yes, it's a correct statement. Capital market avails loans for more than 364 days. Yes, it is also a correct statement. That is more than 1 year, right? So answer is both the statement are correct, right? So answer is C. So let me see some other facts. So answer is C. Financial market in an economy have two separate segments. Yes, two separate segments. And requirement of short-term funds and long-term funds, correct? Yes. So short-term funds, which is known as money market, long-term funds, which is known as capital market, right? The short-term financial market is known as money market, while the long-term is capital market, right? So money market fulfill the requirements of funds for the period of 364 days, right? See, capital market, which is above the 364 days, right? So this is the answer for first question. Let me go the second question. So question number 22. Consider the following comparison between Treasury bills and cash management bill. See, actually Treasury bill, which is also called as T-bill. See, what it means, Treasury bill or cash management bills, all are which is known as security paper. Okay, under the denomination of Government of India. Then only it is called as what? Treasury bill. Treasury, we may use the treasury word is government. Okay, so we cannot use treasury as a private treasury. We cannot oftenly use, right? So treasury is the word exclusive for the government, right? So both treasury bills and cash management bill used for the liquidity shortages of the government. Okay, so right, question number 22, first statement, loans can be availed through both by the government and its discretion. See, it is not discretion. Okay, so statement 1 is wrong. Second, liquidity period for the both is same. No, see, liquidity is nothing but easy flow of money. Okay, which means if you having some paper, bond paper, if you have some metal, gold metal, if you have cash, which is more liquidity, cash is the more liquidity, which means you can easily convertible into a some assets, something, etc. Okay, so liquidity for a period for the both is same. No, actually treasury bills, the liquidity period of time is up to 1 year. Okay, that is short term. In the case of cash management bill, CMB, cash management bill is up to 91 days only. Okay, even treasury bills can be available in the form of 7 days treasury bill, 7 days, sorry, then 14 days, 91 days, 182 days. These are the varieties under the treasury bills, right? So first statement is a wrong statement. Second statement, it is also a wrong statement. So the answer is, so D. Answer is D, right? Treasury bills are used by the government to fulfill its short-term liquidity requirements up to the period of 364 days. So as we discussed earlier, while the cash management bill is a non-standard, which means when the economy, the government feels that there was a liquidity crunch, there was a shortages in the cash flow, then only the government through RBI they issuing the cash management bill. Then only the word is called as cash management. The RBI or government to managing the cash, to controlling the liquidity, to controlling the money supply. Right? It's a non-standard and a discounted instrument, which means the interest, the coupon also give is issued for the maturities less than 91 days. Right? So second, actually the treasury bills to serve the same purpose of ways and means of RBI. Ways and means is nothing but overdraft facility, right? So answer is D. Go to the next question. With reference to the Indian economy, consider the following statements, right? So bank rate, open market operation, public debt and public revenue. Okay, which of the above is our component or components of monetary policy? See, monetary policy is nothing but the policy which is introduced by the RBI. Okay, so in this monetary policy, there are two types. One is expansionary monetary policy. Second one is contractionary monetary policy. Okay, expansionary monetary policy is nothing but to increase the money supply of the economy by reducing the interest rate, which is called as expansionary. So simply expansionary monetary policy is nothing but the RBI to reduce the interest rate, which leads to increasing the money supply. Okay, this is expansionary monetary policy. Contractionary monetary policy is nothing but to reducing the money supply in the economy by increase the interest rate of the banks. Okay, so this is called as contractionary. Actually, expansionary and contractionary both are opposite. Okay, so anyhow, on the basis of this, so the monetary policy will have variety of instruments, maybe quantitative measures, qualitative measures, repo rate, reverse repo rate, bank rate. So bank rate is also a monetary policy instrument, and open market operation. See, open market operation is nothing but on behalf of government, the RBI sell the government securities to the market. Okay, so why the RBI sells the government securities? Because of the to controlling the money circulation, to controlling the inflation, the RBI will do these kind of operations. This is known as open market operation. And public debt and public revenue, these two are coming under the fiscal policy. Fiscal policy which is introduced by finance ministry, like budget, right? So answer for this question is 1 and 2. So answer is C. Let me see some other facts related to this. Okay, so monetary policy is the process by which RBI controls the supply of money, yes, and inflation rate and interest rate to ensure the price stability. Yes, it is a correct statement. RBI reviews its monetary policy every 2 months. Yes, then only it called as bi-monthly policy, right? Okay, who will get headed by the monetary policy committee? Yes, RBI governor. RBI governor headed by the Monetary Policy Committee. It is a 6-member committee. It was formed under the recommendation of Urjit Patel Committee. Already we discussed in the first set of questions. Okay. So the RBI implements the monetary policy through open market operations, bank rate policy, CRR, cash reserve ratio, SLR, statutory liquidity ratio, reserve systems, credit control policy, and moral persuasion. It come under the qualitative measures, etc. Using of these instruments will lead to change the interest rate or money supply in the economy. Yes. So based on the interest rate, the borrower will, if the interest rate is very less, the borrower to borrow more funds from the banks, right? If the interest rate is too high, the borrower want less money from the banks, right? So depends on the interest rate, the bank will regulate the borrowers, right? So increasing money supply and reducing interest rate indicate expansionary. The reverse situation is called as contractionary. Okay, so go to the next question. So which of the following factors can lead to double financial repression? See, repression is nothing but suppression or destroying. Okay, these are all the same meaning about the repression. Double financial repression in Indian banking sector, right? See, actually, bank is nothing but to managing the asset and liability. This is the first priority. To managing the asset and liabilities is the primary activities of bank. Assets is nothing but like banks own money, own resources like capital, okay, lendings. These are all called asset. Liability is nothing but people deposits. Actually, we people go to the bank for to depositing the money in the bank, right? So deposits are called as what? Liability. So the bank has the primary responsibility to managing the asset and the liabilities. Okay. In case there is a problem between the asset and the liability, we may be called as the financial repression or double financial repression. Double is nothing but there is a problem in asset side and also in the liability side. Okay, then only it is called as double financial repression. Okay, so the higher inflation, yes, it is also under the double financial repression. Inflation, which means the bank has to bank already done the lower interest rate to increasing the money supply, which means their lendings also very high, and it leads to the inflation, right? So it is also the one of the reason for double financial repression. Higher levels of priority sector lending, yes, PSL, priority sector lending norms, it is also burdening the government, which means asset side the bank will get very low profit, right? So and SLR, it is also asset side problem, and high in non-performing asset. So all of the reason for the double financial repression. See, I may tell you the very simple in manner. The problem of the banks in asset side as well as liability side, which means a bank giving his bank capital to the people. In case the capital which is not returned to the bank, means there is a problem in asset side. Liability in the sense people will deposit some money into the banking, but the bank which is not repaying the people deposit to the concerned people, which is the problem is liability side, right? So this is called as double financial repression. So based on the above discussions, the answer is D, all the above. So let me see some more other facts. So double financial repression is nothing but the problem faced by the banks from both liability and asset side, right? So higher inflation creates a liability side problem. It discourages the public to keep deposits with the bank, impacting their loan giving capacity. See, if the inflation is too high, the people do not enter into the bank and depositing the money into the bank, right? So it leads to the loan giving capacity of the bank maybe erodes, that is reduces. Okay, so this is also a problem. Higher PSL, SLR do not allow banks to give enough profitable loans, affecting the asset value, correct? Right? So NPA also a worsen quality of banks, right? So always their non-performing asset will lead to reducing the quality of the banks. Actually, recently the SBI chairman requesting the RBI to dismantle the SLR rate. So to keep on the CRR rate. Okay. See, in India, CRR rate is around 3%. SLR is around 18%. Around. Okay. So the bank has to maintain the capital around 21%. Okay, remaining 79 percentage only they have to give to the people, right? So the 21 percentage of money to be locked. So then only the SBI chairman criticized. So RBI hereafter don't want to maintain the banks as a SLR norms. Anyhow, so we'll see the what happened in future. So next question number 25. So the sample survey organization. So NSSO. So NSSO is come under the what? Ministry of Statistics and program implementation, right? So categorized unemployment under which of the following heads of circulation? See, unemployment is nothing but people are ready to work, but the job availability is not there. Okay, so this is called as unemployment. See, for the calculation of unemployment, the NSSO will have three set of rounds to calculate unemployed people. First one is 365 days, which means the people who are not working more than 183 days of a year, which is called as unemployed. Second is what week? Yes, second one is weekly, that is 7 days, and third one is daily, that is every day more than 4 hours of a work. Okay, so these three are the factor to calculate unemployed people in India. So on the basis of discussions, the usual status unemployment, which is known as 365 days. Okay, 365 days. Okay, 365 days. So first statement is correct. Current weekly status unemployment, yes, it is also a correct. Monthly status unemployment is not there. So yearly is nothing but what usual status employment, but it is not a correct term. Okay, so we cannot use yearly status unemployed. Usual status unemployed is the right term. Okay, so answer is C. Okay, let me see some other facts. So the National Sample Survey Organization, since its inception 1950, it does measure the employed and unemployed people in India. Correct. The National Sample Survey Organization provides the three different. Okay, so one is usual status approach 365 days, and then current weekly approach, it is 7 days, and current daily approach. Correct. So let we go the next question. So livelihood, inclusion and financial empowerment missions, sometimes seen in news recently. It is implemented in which of the following state? Actually, it is a fact based question. Answer is Kerala. Okay, so let me see some more facts regarding that. So within the Kochi corporation limits, 2225 houses has been constructed under the Pradhan Mantri Awas Yojana. See, Awas is nothing but housing. Okay, so the Pradhan Mantri Awas Yojana and the Life Mission both are run by the state government to constructing the houses in the urban areas. That is Kochi Corporation Limit. Okay, so anyhow, we'll read the some more facts related to that. Okay, the answer is Kerala. So go to the next question. South Asia Economic Focus Outlook Focus Report was released recently by World Bank. Actually, in this report, uh, because of the pandemic corona, our India's GDP might be reduced to some very low percentage, right? Actually, in 2019-20, our economic survey denotes that India's GDP is around 5.5 percentage. Okay, sorry, 5 percentage, which is also a very lower 5 percentage. Then 2020 to 21, our expected growth of GDP is around 6 to 6.5 percentage. But unfortunately, because of the corona pandemic, we may not achieve this target. So then the report which says that very low percentage. Okay, so answer is A. According to the report, South Asia Economic Focus released by World Bank. Okay, so India's economics expected to grow 1.5 percentage to 2.8 percentage for the fiscal of 2020-21. Okay, this is very low since 1991, right? Okay, it estimated India will grow 4.8% and 5% in 2019-20 end of March. Okay, see, actually, end of March we predicted 4.8% to 5%. Before that is while releasing the economic survey, our growth rate for 2021 is predicted as 6 to 6.5 percentage. Okay, so anyhow, there is a problem. Next question, 28. Question number 28. Okay, so consider the following statements with respect to the Samadhan Challenge Initiative. So Samadhan Challenge Initiative, which was launched recently. So first statement, it provides a facility to users to call branch managers for any query, and also to register their complaints and can track their status of resolution of these complaints as well. Actually, in RBI also there will be a provisions that is a banking ombudsman scheme, right? Ombudsman is the person which is intermediary between the banks and the customer. Okay, if there is any problem between the banks and the consumer, the ombudsman will entering to the problem and solving the grievances of the customer. Okay, anyhow, there will be a mobile app also, so that we discuss later. So it was launched by the State Bank of India. Actually, both the statement are correct, but the question is, it's not Samadhan challenge. The answer is Samadhan, Madhaan, Dhaan. Okay, Samadhan app, which is introduced by the State Bank of India. Okay, anyhow, so based on Samadhan challenge, it is not the correct answers. See, Samadhan challenge is different from Samadhan mobile app, right? So for this question, the answer is neither one nor two. Okay, so let me see some more facts. Answer. So the innovation cell of Ministry of HRD, Human Resource Development, and AICT, All India Technical Education, collaboration with the Forge and Innovative Crews. The online challenge Samadhan, which is the initiative of to test the ability of the students to innovate. Okay, so Samadhan challenge is nothing but both students as well as the faculties to innovate something, to innovate something to solving the solutions of future needs, right? So this is the initiative of HRD is Samadhan, right? Okay. So apart from Samadhan challenge, work will be done to make citizens aware, to motivate them to face challenge, to prevent crisis, to help people get livelihood. Okay. Next, actually, I already told you Samadhan app. Okay, actually, the spelling will be the difference. Okay, it was launched by State Bank of India. Yes, correct. So actually, customer can download account statement for last 6 months. Yes, and if the customer will have something can generate housing loan and education loan interest certificates, which will be sent to their email ID registered with the bank. Okay, and some of the frequently asked questions including videos for deposits, advances, ATM, internet banking, also done under the single roof of the State Bank of India, which is called as Samadhan app, right? Okay, so go to actually Samadhan app is different from Samadhan challenge. Samadhan app is developed by what? SBI. Samadhan challenge is under the initiative of HRD ministry. Okay, so next question. So answer the following statements with respect to the India volatility index. Okay, VIX is nothing but index volatility. Okay, so actually it is the initiative of National Stock Exchange. In India, there are two major stock exchanges, BSC, which is called as oldest in Asia. I think it was created around 1850s, and NSC, National Stock Exchange, which was introduced in the year of 1993 under the recommendation of Perwani Committee, right? Okay. See, actually in BSC, the indexes may be called as Sensex. In NSC, they may be called as Nifty 50. Here, top 30 companies to be taking for the consideration of increasing shares or decreasing shares. Here, 50 companies. So, top 30 or top 50 may be called as blue chip companies. Okay, so anyhow, so volatility index also introduced by National Stock Exchange in the year of 2010 around. Okay, India's first volatility index is the first kind of it in the world and was introduced in 1993. No, NSE was introduced in the year of 1993, not volatility index. It is the index to use to measure the near-term volatility expectation of this market. Yes, near-term is nothing but next to 30 days. Next to 30 days, we can predict what is the future expectation of the market. Okay, everything to be decided under volatility index. So answer for this question is 2 only. Okay, so let me see some other facts. In current calendar year, the India volatility index has jumped 5-fold times because the predictability is not incorrect, maybe not correct. Okay, 12 levels to 67 levels. Volatility index is nothing but an index used to measure the near-term volatility expectation of the market. Volatility signifies the rate change and magnitude of change and stock price and index value. See, volatility is nothing but changes. That is the simple meaning of volatility, change. Okay. The movement in the volatility index reflects the overall market volatility expectation over next 30 days. I already told you next 30 days. So is a very interesting name is fear gauge and fear index. Okay, right? So some other facts. It is also launched by what? National Stock Exchange. Okay, in the year of 2010. Okay, actually 1993 NSE was introduced. So volatility index was introduced in the year of 2010. Okay, so these are some other facts. You can read it well. Go to the next question. That is last question. Uh, the Indian Economic Survey 2020 suggests employee stock ownership for which sector? See, stock is nothing but the value of the shares. Stock is nothing but value of shares. Example, I holding 10 shares, which having each one is 10 rupees. So I'm holding 100 rupees stocks. Okay, the value of shares is which is known as stocks. Employee stock option is nothing but employee of the company may be eligible to buying the whole shares of the company. Okay, this is known as employee stock option ownership. It is also known as sweat equity schemes. Sweat equity. Okay. Anyhow, so on the basis of employee stock ownership scheme, the employees economic survey suggests that for banking industries, the employees working under very severe problem because the employee don't have any responsibility for their lendings to the customer. Okay, so what is the solution? If the bank gets more and more NPA, non-performing asset increases day by day, right? The solution is if the employee has more responsibility in towards the banking means it maybe reduces the non-performing asset, right? So on the basis of this discussions, the economic survey arrives that if the employee may be the owner of the bank, one of the owner of the bank, it hereafter the employee very concerned about to lending the loans, right? So then only the scheme was arrived. So the economic survey 2020 suggests employee stock ownership for banking industry. Okay, so let's see some of the facts. The economic survey 2020 depicts the growth of the Indian banking sector has been inappropriate, which overall economic growth, yes. So to accelerate the growth of banking sector, please noted, to accelerate the growth of banking sector, survey suggests employee stock ownership plan for banking employees. See, hereafter banking employees is not only the employee of the bank, but also the one of the owner of the banking. If you are a owner of the particular bank, you have more responsibility towards the functions, right? Lending functions and everything. Okay, so then only the economic survey arrives it. Okay, so thank you. So have a nice day.